banking sector, how they performed last year is very vital. And let's go with Bahrain to start with. Credit growth 7% in 2020. Asset growth 2.3%. NPL is stable. Year-on-year profit is of listed bank declined by nearly 37% due to COVID-19 provisions. Average capital adequacy is good, 18.9% by December 20. When it comes to return on equity, 8% by December 2020. Return on assets, 0.8%. Return on assets, 0.8%. Return on equity, 8%. And capital adequacy is quite healthy, 18.9%. So profit has come down last year. When it comes to Kuwait, asset growth 5.3%. Net profit have declined by 53% due to higher COVID-19 provision. Average capital adequacy is around 18%, 17.9% to be precise. NPL ratio increased by 0.3% and remained at 1.6%. Return on equity 4.4%. Return on assets 0.5%. Return on assets 0.5%. Return on equity 4.4%. Very important that we compare the Gulf, the overall banking system. That's where this comparison is quite relevant. Return on equity is still low everywhere, 4.4%. And return on assets are also low, 0.5%. Oman, return on assets 0.8%. Return on equity is around 6.4%. Average capital adequacy is around 17.4%. Net profits have declined by 32.5%. Again, higher COVID-19 provision. Asset growth of 8 banks, 3.6%. Credit growth still needs improvement. Qatar last year, if you look at asset growth, 7.3%. Net profit has come down by 12.4% aggregate, all banks put together. Qatar listed banks recorded lowest profit decline among its regional peers because market is giving you the opportunities. Banks saw growth in asset base, capital adequacy 18.7 healthy, return equity 12.9%, return assets 1.3%, 4.33%. Now, when it comes to the higher interest, the impact of set by higher interest spreads and lower cost has reduced, the net interest margin has improved, increased loan provisioning as a result of credit challenges faced by the borrowers reflected cautious approach of banks. Qatari listed banks recorded lowest profit decline among its regional peers. Net profit dropped by 12.4%. Asset growth is around 7.3%. Return on equity is around 12.7%, which is healthy. Saudi banking, return on equity 8.8%, return on assets 1.3%, capital adequacy 20.5%. So SAMA's generous injection of deposits under the support programs and overall liquidity protection by corporates and individual alike enabled impressive 9.2% growth across the bank and non-bank deposit base. And lending at 12.56%. Net increase is good when compared to the previous year. Net profit up by 23%. Asset growth 13%. Asset growth is 13%. Net profit is 22%. Drop. Lending growth 12.6%. Again, capital adequacy is good. Impressive if you look at the capital adequacy 20.5%. Return on assets 8.8, 1.3, return equity I should say 8.8%. These are all looking good. So in terms of UAE banking sector, capital adequacy 18.1, return equity 7.7%, return on assets 1%, NPL 4.4%, asset growth 7%. Net profit of the top UAE banks fell by 41% due to increase in provisioning. despite the capital liquidity remains strong, the overall, if you look at the big picture, net interest margin continues to be under pressure because of the record low interest rates exacerbated by the increase in competition. NPL increased by 4.4%. Bank's profit has come down by 41.2%. Qatar, we have seen economies, even though it's taken a contraction last year like the rest of the world economies, the banking system is stable. Financial stability is always there. 1.3% return on assets, return on equity 12.9%, capital adequacy 18.7%, high interest rate spreads and lower cost. Listed banks recorded lowest profit decline among the regional peers. Net profit dropped by 12.4%. Everyone has dropped, but Qatar has dropped by 12.4%. Asset growth is there still. So plenty of actions in the market, and we have seen the reflection every market, right from Bahrain to Oman to Qatar, Kuwait, UAE, Saudi Arabia. So macroeconomic similarity is there in terms of the overall economics, because oil producing countries. And there are countries where they're exceptionally doing because there are projects government expenditure is driving in terms of fiscal framework. If you look at countries like Saudi Arabia or Qatar, they're spending a lot of money to modernize, and also upcoming 2022 plus the overall urban development is also going to be a major opportunity for banks to lend. That's why credit expansion is taking place. Precautionary provisions are taken, capital adequacy is healthy, return on assets, return on equity are all measurable in real terms.